Hey guys, this is Moshi and today we are going to analyze GM Breweries. We are basically going to analyze its fundamentals and technicals too. So let's start the video with the technicals part. GM Breweries. Okay. Here we can see it has gained too much value uh, within this week. Okay. Look at the look at this momentum around 68%. That's quite too much, right? We go with the look at this. I mean, initially it was just now it has taken it is all time. Let's see the chart first. Yeah, right. It has broken it is all time high of around 10,000, and now this trading at it is all time high, right? That's why I was thinking to analyze this stock. Okay, so let's go with it is fundamentals. Okay. As you can see that it is market cap is 2,659 crores only. So basically it is a micro cap, we can say that. Okay. So basically GM Breweries Ltd is set up in 1981. Manufactures and market alcoholic beverages. Alcoholic beverages such as country liquor and Indian made foreign liquor. Okay. Basically they are making the liquors. So as you can see the stock is 18.6 and in the ship is 33. That's what you can see that it is undervalued as per the industry here, right? Return on capital employed 18.1 and return on equity is 14.6. So basically ROC is greater than the ROE. That shows that they have very less debt, even nil. As we can say, debt to equity is nil. Promoter holding is quite good, 74.4%. That shows that they have confidence in their company. EPS for the 5 years is quite acceptable, not that much good, and EPS for the 10 years is quite good. That is 22%. Quick ratio it should be more than 1. That's good. Okay. So they have liquidity, short-term liquidity, and current ratio is 1.37. It is also good. They don't have excess in within their stock. Okay. Book value is 431 and the price to book value will be 2.7. That's good. And sales growth for the 5 years is quite low. We have to see that. Average dividend payout is 10-11 approx. That is around 0.64. Even though it is a small cap company, but still they are paying the dividend to the people. That's quite good, right? EBITDA is quite high. As for the overall valuation, we have observed PAG ratio is not good that much. It should be lower than 1, or I can accept if it is 1.2. Then still okay. So let's analyze it is PE and EPS growth over the years. Okay. In 2010 they were having a PE of 11 around and the EPS of and in 2014 they were having a EPS of 8.4 and in 2017 they were having a PE of 14 and the EPS of 21 and in 2020 they were having a PE of 10.8 and the EPS of 32. That's what. And in 2022 they were having a PE of 10 and the EPS of 46. And in 2025 they were having a PE of 10 and the EPS of 68.2, and now they were having a PE of 18 and the EPS of 62. Overall, as per the EPS and the PE trend, we can say that the company is quite undervalued, right, as compared to it was previously trading, right? Let's compare with its peers. As you can see, quarterly sales variance is quite good for the company. PE ratio also good. EPS for the 12 months is very excellent. Sales variance is quite acceptable if we compare with its peers. Profit margin variance is quite low. Interest coverage ratio is good. Current market price to the book value also good. EV to EBITDA is also good. Current market price to the sales excellent. ROE and ROCE also good if you compare with the peers. Okay. There is no pledge and the debt to equity is good. And the P, if we compare with the P, is the most undervalued stock here, right? Now let's analyze the quarterly sales variance. Okay. As you can see, within 3 years of time span, they are able to generate from 142 to 181. Year on year sales growth, if you look at that, they are in at least in positive. That's good. Operating profit margin has been a little bit compromising in between that. Okay, but still they are from 80%. They are in recent quarters. They are able to generate from 18 to 25 as well. Net profit. Let's talk about the net profit from 33 to 35. Around we can say 30% increase. We can say that. That's good. In 3 years, that's quite. We can say it is a stable result. Right. Profit and loss statement, that is income statement. If you look at the sales from 2014 to 25, within the years time span of around 11 years, they are able to generate from around, we can say 300 crores to the 650 crores. That's quite increase of the 130%. So they are not doing that much here because you can see it is stable. Look at that, this number. Except this, afterwards it is going increasing, like, and the operating profit margin has been increasing. You can see from 15%. There was a time they were able to generate 25% operating profit margin, but it was recently reduced. But still, they are able to from 15% to 80%. That's good. That's why their net profit from 22 goes to the 120, 130 crores. That's quite 10 times. Even though the sales has increased by the only 130%, that is 1.3x, but the net profit has been increased by the 10x. That's quite excellent. They are doing excellent, right? And also they are continuously paying a dividend. You can look at this one. Balance sheet. Equity capital, okay. Reserves are been increasing over there. That's very good. Borrowings, because they have no borrowings. That's very good thing in the company. Fixed asset, as we can see, they are actually investing in the fixed asset. There is also current capital work in progress was there. Investing, now they are started doing investing. That's good. Okay. So overall, till now, the company is doing well, quite good. Now let's analyze the actual picture of the cash flows. Cash from the operating activity, whatever the cash they are able to generate from the operating activity. Within 3 years, they are able to generate from like 2,000, 4,000 and 1,800. 5,800 crores within 3 years of time span and 5,800. Now let's go profit and loss. Check this. So 300, around 500 crores. It's like 50. They are able to collect profit 5,000 crores of. There is something wrong here, I think. I mean, they are generating they are able to generate around here only 500 crores. So how they are able to generate here 5,400 crores? We have to look these numbers, right? There might be some kind of things which is happening around which we don't know. I will be sharing the details of the same. Okay. So for now, just leave this part. Okay. Fixed asset prices, also I told you that they are actually investing in that, and also they are purchasing investing. That's good. No, after this look like they do only cash basis sale. They are not selling on credit. Look at this, it is 0. Inventory days are quite fluctuating, and days payable are also low. So overall their net working capital is stable in the business for the 21, but it is quite good. Okay. and we can see that shareholding pattern. Promoters holding remains same. The company have confidence in their company. FIIs have initially started doing investment, but now they don't have any stake in the. They have to have a stake in the company, but it is too low. They are also now to consolidate this company. Overall, company is doing very well, and it is look like a stable business. And also, if you see the resignation, the director has been resigned recently, and the original director already resigned. Company secretary in 2023. There is no major person. Let's see the credit rating of this company. Basically, they don't have any debt, so we don't have to look at that. So overall, the company is doing well, but it is a liquor company. I don't support this kind of things. So overall, company is doing very well. So thanks for the watching. I just selected this stock for the analysis because I saw that it's getting too much boom. I was not I was not checking the which kind of in business they are operating. That's why I just quickly started recording this video for analysis. It is just for analysis, not for your investment, because I am not registered research analyst. As you can see, which my analysis like. Thanks for the watching. Have a nice day.